Well, welcome back to the Foreclosure Podcast. My name is Bryan.treat with Orchard. Every week on this podcast, we talk about foreclosures, the economy, in my mind, my opinion, growing wave of foreclosures that I think are on the horizon. And if you've been listening to this podcast for a while, you may have listened to the various episodes we have where we sort of talk through loan modification and tips and tactics on how to avoid foreclosure and things you can do in a proactive way to help yourself out. The underlying advice is always don't do nothing, do something. If you're listening to this podcast, we'd appreciate it if you'd like and share and subscribe. All this content lives at theforeclosurepodcast.com. You can also find us on pretty much every single podcast platform out there. So Spotify, Apple, etc. And if you're in a financial crisis and you need some help, you need a realtor in your area. I work in Texas. Our guest here is licensed all over the place. But if you need help from a realtor or from an attorney, you can also go to theforeclosurepodcast.com. Drop me a line and can very easily help you in Texas, but can probably help you almost anywhere in the lower 48. So please don't do nothing and please check out our website and let us know how we can help. This week on the podcast, I'm joined by Christian.volker with Orchard Mortgage, and we're going to talk about the economy and mortgage lending and those types of things. So, Christian, thanks for joining us.
Yeah, thanks for having me, Brian.
Absolutely. So, in my mind, prior to the pandemic, real estate and the economy and sort of interest rates, the marketplace seemed pretty consistent with the,
hmm
and predictable with the exception of 2008 maybe, but
Yep.
certainly from 2010 to 2020, things were predictable and there was some level of normalcy. And then we hit the pandemic and kind of all bets are off in terms of, no one seemed to know. And that level of uncertainty in my mind sort of seems to persist. What
hmm
are you seeing out there?
Yeah, I think you're absolutely right. We were in that like 3 to 5% interest rate for a long time. Normal, consistent. Pandemic hit, where maybe sub three for the first time in ever,
Right, right, right,
And then since then, we've really seen interest rates come back up to 6%, 7% even,
right.
which has created a really unique time for homeowners, and especially those who are looking to purchase a home. I think the economic landscape that I just talked about, that 6 to 7%, has made it harder to purchase a home than it's been in a long time. On top of that, you have cost of living that's increasing on people. Um, and home prices are increasing, right? So you've had home prices increase, cost of living increase, and both of those have increased at a faster rate than wages. So that delta
Right.
has continued to spread, right? Which
hmm
again just makes it a really hard barrier for people to enter the housing market. Um,
Hmm.
I'll add one other layer of complexity that always comes to mind that I don't think is talked about enough, which is first-time home buyers. Naturally, you're just going to buy a home when what? You've just saved enough money or you've just finally gotten that pay raise, right? You're finally at a
Right, right,
point
right.
where, like, oh, I have some extra spending ability. So you're kind of naturally at this like hard level for a lender to qualify just because by virtue of you've just saved enough and you're just now earning enough. And then on
Mm.
top of that, you have all of these expenses that are kind of working against your ability to purchase a home. Um, and now we have 6 and 7% interest rates. So it's just created this like dynamic in the market that's making it harder and harder for purchase people to purchase homes at a younger age. And so lenders and agents have had to become more creative. That's why you're seeing, 2-1 buy down options, 0% down options,
Right,
the
right,
home
right.
possible stuff. You're just seeing all of these products in the market that are trying to help people afford a home. And you're seeing agents also getting a little squeezed in that kind of same thing, in that, like, well, some of their commission is going to help cover closing costs, things like that, that just
Right, right.
it's really not the fault of lenders or agents, of course, that these other macroeconomic things are happening, but they're kind of the ones in the middle that are getting squeezed to help people afford the home anyways.
Right, sure.
And so I think that's what we're really seeing in the market right now, and it just makes it interesting, for lack of a better term.
Yeah, so it does seem to me on some level that we have our shared collective memory of what it means to have high interest rates has must have
Mhm.
changed because the first time I bought a house 30 years ago, I know my interest rate was over nine. By random happenstance, the last home that my parents bought, they bought it in that same window or a couple of years prior, and theirs was over 10, I think. And so when I'm out there, helping folks and talking with buyers and sellers, and people are complaining about these,
Yeah.
allegedly incredibly high rates, I'm like, really? So
Yeah.
in my mind, at first glance, six and a half, six and whatever it is, 6.75 does not seem awful because my frame of reference is way higher than that.
Yeah. Yeah, I think that definitely falls on deaf ears for people who are looking to purchase now. They're like, I don't care
Right,
that
right.
you purchased 30 years ago at 10%.
Right.
My
Yeah,
friend purchased 3 years ago at 3%.
at 2.75. Right, right. So,
Yeah, and so they want that lower rate. And then I think again it kind of goes back to that. Well, if you purchase in the 80s, your cost of living relative to your wage was so much different than kind of what you
oh,
see in the
right.
market today.
Sure. Right,
Yeah.
absolutely. And so there are some number of loans out there, FHA and VA loans that are assumable. And
Yeah.
so homes that are on the market now, I mean, I see all the time agents who are very aggressively marketing
Hmm.
properties with assumable rates aggressively. That is the first sentence that there's put in any sort of description for the property has a 2.75 or whatever it is assumable rate, whether it's
Yeah.
FHA or VA. So huge selling point. So if you're out there pondering, trying to buy in this market, and a number over six is giving you heartburn, by all means poke around online and try to find an assumable home that's out there because there are a fair number of homes. I mean, it's not a huge portion of the listings out there, but there are some out there that are at far better rates. Something tells me you probably have strong opinions about all the down payment assistance programs that are out there that are sponsored by various entities. Do you have
Sure.
good, bad, or otherwise on those?
Yeah, I mean, well, I think it's good in general. Um, I think what makes it tough is a lot of these programs are really designed to help a home buyer, but they're hard operationally for lenders, for agents. There's so many different ones. Not every lender can do each one. The qualifications for each one as a consumer, you don't really know, like, do I qualify for this low down payment assistance program or this one? You know what I mean? Like, nobody
Right, right.
really knows that. And so it really puts a lot of onus on agents and lenders to know these things. And frankly, there's so many out there that it's actually a pretty difficult product for people to do well. I still think as a consumer, you have to try to find it. Your agent, your lender, they'll have like a niche product that they know well. And so
Mhm.
you just have to talk to some different lenders. You have to talk to your agent about what they know. Um, I do think, that's kind of what I was alluding to earlier, in that like there's creative solutions that are coming out of the current environment we're in, which are those
Mhm.
low down payment assistance. I know at Orchard we do like 0.5% off your interest rate if you go with Orchard Mortgage, and you're buying an Orchard listing. We do 2-1 buy downs. I mean, we're trying to do a lot of these creative things. We do an equity advance, as you know. We try to do a lot of these creative things to help people do that, but frankly, it's a tough process. Mortgage is antiquated. It's just kind of a tough process. And then when you try to do something new and novel,
Right, right.
you have a lot of red tape to get through to do it. Investors are, little sketched out by new products. I think going back to, 2008, it's like look what happened when, lenders and banks said, yeah, we'll do all these cool new things. Obviously, there's a lot more regulation today because of that. But I think you still have some trepidation from lender or investors to kind of quickly be okay with any new product because they don't know yet the risk that actually
Right,
brings to them
right.
from
Absolutely. Right, sure.
from the home buyer.
The other thing that Orchard Mortgage offers, which I think is a fabulous and a huge selling point, is the lifetime refis at no
Yeah.
charge. And so if you're out there in the market and you're looking to buy, and interest rates are the thing that are giving you the most heartburn because you're concerned about getting locked in at a number that seems you know way too high.
Mhm.
We do offer the means of coming back to you twice a year, and if those numbers do come down, In my mind, it would have to come down at least half a point in order to be really worthwhile.
Yeah,
That
depending
about
on
right?
the home price, yeah, quarter to
Right.
half.
Quarter to
But
half would be
I
sufficient.
think I think we have a really good combination of products here. We have the 2-1 buy down, which means in the first year of your mortgage, you have a 2% lower rate than the market rate. The second year, you have a 1% lower rate. So it's a substantial, savings.
Right.
And then we offer that free refi. So in that time, if rates have dropped, take advantage of the free refi. And in that time, you're already paying a lower than market rate. It's a really
Right.
good 1-2 punch for, purchasing a home.
Right. The other question I had, and I've asked this of other guests, I would swear when I was a younger person and thinking through budgeting and looking at personal finance, I would swear that I was told I mean, one's housing payment shouldn't ever be more than either 33% or I could have sworn I
Mhm.
saw 40% of your gross monthly income. And I always thought at the time I can't now swear that I saw that because I can't now find it. But I always tried to use like 25% as
Sure.
my maximum percentage allotted to housing.
Sure.
From a lending perspective, how do you crunch those numbers and what do you advise folks?
Yeah, from a lending perspective, you can go up to 55% of gross. Most qualifications are
Oof.
50% of gross. And then favorably, you want to be under, say, 43%.
Okay.
I think most consumers are comfortable at the level you mentioned, 25-ish percent.
25 or 30,
Because,
right?
yeah, when
Yeah.
you go to 50% of gross and then you look at net, it's the majority of your monthly
Right.
take home is going
Sixty
towards
percent of
house.
you, sixty
Yeah,
percent of you, yeah,
exactly.
or even more is
So
going just to your house payment.
and I think that's where a really good loan officer steps in and they can kind of talk through what you qualify for. But let's also look at your personal situation and see what you're comfortable with. And let's create a pre-approval with your purchase price and down payment, resulting in a loan amount where your monthly payment is now at a comfortable level. Let's talk
Right.
through those options. And then that way okay, I'm at a comfortable level if my loan is, call it 400K, but I do have some more room to go north in actual qualification. I just have to know that, well, now
Right.
more of my monthly, expense or my monthly expense is attributed to the mortgage.
Right. Okay. Yeah.
Yeah.
Makes perfect sense.
Yeah.
The other question I had for you, oh, I had it and then I lost it. Oh, I know what it was now. The In terms of other just other advice, one of the things that I've said to clients repeatedly, to buyers, and this has never happened to me when working with clients, but I've heard horror stories about a buyer's agent who's working diligently with a very excited and qualified buyer, and then that buyer goes out and buys the new car or does something
Mhm.
crazy with their financing in the days prior to closing, and then you come back through, prior to being clear to close, and you find this great big fat new liability on their credit, and it
Mhm.
scuttles the whole deal.
Sure.
So beyond the obvious advice of don't go buy a nice new car or a hot tub before you close, what else can you suggest in terms of general advice in terms of getting
Yeah.
approved and making the process easier?
Yeah, generally you just want to keep your whole financial picture as steady as possible through the entire buying process. And what do we mean by financial picture? It's really three facets. One is your credit. So like you mentioned, you don't want to add anything to your credit. You don't want to take additional credit pulls to like buy a car, take out another type of loan, anything like that. You just want to keep that as steady as possible. The other is your income. So the second one is your income. Don't You really shouldn't be switching jobs. Sometimes you are buying a home because you're getting a new job. That's a different case. You know about it up front, but we have to qualify you on your income. So if on a whim you say like I don't like this job anymore, you need a new one, and we're
Mm,
going to have to requalify you. The other is assets. So we've also qualified you based off your assets, making sure you can afford the down payment and closing costs. Most people, it's most people know like, okay, I need that money to purchase this home I'm about to buy. And so you wouldn't want to just go spend it all. You don't really want to be moving money around a lot. And if you are, you just want to make sure your loan officer is aware so you can document it properly.
Right.
Those are kind of the main things. And in general, you just want to keep kind of that whole financial picture as steady as possible and just be really transparent with your loan officer because they can kind of help you through like if something is changing, this is what we'll need, this is how we document it, and let's make sure you're still going to be okay at the end of the day to purchase the home.
Okay. Yeah. I mean, all that makes perfect sense. For someone like me, so someone who is commission based, is it beneficial I mean, if I wanted to go out and set up, like I keep meaning to do this, set up Bryan.treat LLC, and then draw a regular paycheck from that, does that improve my outlook from a credit standpoint?
No, no. If you're commission based, there's just a little bit of different requirements around it. You could do that if you wanted to, but
Mm,
basically commission based people, we just need a history of it because it's a little more variable than
right.
say like a W-2, right? So typically you're looking at least 1 year, most of the time 2 years to look at how much commission you earned over those 2 years. The lender needs to see that that commission's been steady across those 2 years. And then they'll calculate it based off of an average of the last 2 years of commission.
Okay. Yeah.
Yeah.
Also, makes perfect sense.
Yeah, it just makes it harder than if you're a W-2, you don't need that history necessarily. You just
Right.
need to see that you've been paid and that you are currently a W-2 employee. So the commission base just is more of like a timing thing. You just kind of have to see it for a longer period of time for the lender to feel comfortable around it.
Right. Sure. Okay. Yeah, that sounds great.
Yeah.
Well, we'll make a point of putting your contact info in the show notes as well. Any other input or tips you want to give?
No, I mean, I think this covers kind of a lot of those basics that people want to know about, the current environment as well as kind of personally what you need to kind of think through when buying a home. And I'm always happy to talk to people about, their personal situations. And I know our loan officers here at Orchard are as well.
All right. Well, awesome. Thanks for coming on. I appreciate it, and it's definitely super helpful. Information to have out there. This will be on every single podcast platform. So if you're listening to this, please like and share and subscribe to our stuff. It all lives at theforeclosurepodcast.com, but it's on every single platform as well, even on YouTube. So if you can like and share that stuff, that'd be great. And Christian's info will be in the show notes. And as always, thanks for listening.